and welcome to Business Morning, the final one for the week. I am Bisi Adebayo. President Muhammadu Buhari has received the newly elected president of the African Development Bank, Mr. Akinwumi Adesina, at the State House in Abuja. And President Buhari is soliciting Mr. Adesina's support towards fixing the infrastructure deficit in the country. He made this request while receiving the AFDB president, who recently won an unprecedented 100% vote after overcoming stiff opposition to guarantee him another 5-year term. President Buhari says he backed Mr. Adesina's second-term bid because he has proven to be a good Nigerian. Meanwhile, the federal government has explained its decision to fully remove subsidy from petrol, saying the country stands to rake in over 1 trillion annually, which could be deployed to fund other critical components of the economy. Addressing a news conference in Abuja, the Minister of State for Petroleum Resources, Mr. Timipre Silva, also revealed that with effect from October 2020, Nigerians can now convert cars using petroleum to gas, which he says will be cheaper. According to him, the introduction of the fuel, also known as autogas, will be an alternative aimed at giving government's deregulation of the petroleum sector a human face.
Vehicles to CNG or to gas.
And back home.
What we achieved last year, oil price was $60-something per barrel. This year, we have lost more than 60% of that value that we had last year. So we are not even talking in terms of $100 oil, which was the reality at the time of the previous administration. So at this time, where do we have the money to continue to subsidize? Subsidize a product that is not, at the end of the day, in the interest of the common man. Because the people who are taking advantage of the subsidy are not the common people. The people who are feeding fat from subsidy are not the common Nigerians. So we are bringing it to you, gentlemen. We are democratizing the process of pricing PMS. Instead of government sitting back and then some people coming on fixing the prices and some unscrupulous business people taking advantage of that situation. We cannot continue with that as a nation.
And still talking oil prices now, they're traded below $40 per barrel once again. And that's pressured by a surprise rise in U.S. stockpiles as the coronavirus pandemic continues to erode demand for fuels. Brent crude was seen at $39.88 a barrel in early trade after falling nearly 2% on Thursday, while U.S. crude dropped to $37.16 a barrel, having fallen 2% in the previous session. Well, both major benchmarks are down around 6.5% for the week and headed for a second week of declines as hopes dim for a steady recovery in fuel demand amid signs of second wave of coronavirus outbreaks. Meanwhile, a Reuters poll showed U.S. crude inventories rose 2 million barrels compared with forecasts for a 1.3 million barrel decrease. Well, let's head to our conversations now. And Nigeria is reported as the 16th largest producer of tomatoes in the world. And in spite of this, the country still imports tons of tomato paste and other byproducts to meet the tomato consumption needs of citizens, and the national demand for tomatoes is between 2 to 3 million tons every year. But Nigeria is estimated to be losing around 65% of its tomato production to wastage and spoilage on the farm during transportation at the market and stores and even in the households. And this even makes the matter more relevant at a time that Nigeria is projected to be faced with some level of food insecurity due to the shortage of some other commodities, as the adoption of a good and efficient harvesting technique and post-harvest handling practices becomes imperative at this time. And so joining us for a chat on the prevention of tomato wastage this morning is a student of the University of Lagos and a founder of Nigerian Tomato Project, Rachel Agbanagba. She's right here with us in the studio. Good morning, Rachel. Thanks for coming on the program.
Good morning. Thank you.
Now, it's quite interesting to note that you're a student of petroleum and gas engineering. So what would have informed your interest in tomato production?
Okay, so I really, apart from being a student of petroleum and gas engineering, I really love creating impact. I really love challenging the status quo. So I look for opportunities to create social impact. So I found the tomato issue, and I was really glad that I could really provide a solution for it.
Now, let's talk about tomato wastage in Nigeria, which is quite huge. What would you say about that, and how that informed your decision to go into this?
Well, I feel that about 1 million metric tons of tomatoes rot as waste each year. And that figure alone is enough to meet the import demand of Sweden, which is 80,000 tons, Denmark, 40,000 tons, and Norway, 25,000 tons, 6 times over. So apart from these tomatoes that waste, Nigeria is still the largest importer of tomato paste in the world. So if we can actually find a way to convert this wastage into a new good, then it will be better, because the farmers won't lose a lot. They will actually gain from what will otherwise be wastage.
But why do we have such a huge wastage? What's responsible for that?
So I feel that 65% of these tomatoes go to waste, meaning that only 35% actually get to the large markets like Lagos in the south and some other markets.
And that's barely enough.
And that's barely enough. We can't even meet the demand of tomatoes in Nigeria, actually. What we produce is not even enough to meet the demand of tomatoes in Nigeria. So I feel that when these tomatoes are coming, we can actually provide more tomato crates, because when they bring it in raffia baskets, and with bumpy roads, before they get to the market, most of them are already spoiled or something else. And also, they could actually do refrigerated trucks to solidify it, because solidifying it makes it harder for it to get spoiled before it gets to the market, because sometimes it stays 1 day, 2 days on the road, long distances before it gets to the market.
And these farmers, of course, they've been doing this for years. Is it that they're not aware of ways that they can actually prevent or, extend the shelf life of these tomatoes before they get to the end users?
Well, most of the farmers, the bigger farmers, have rapports with processing facilities. They have rapports with the big firms and others. But then the smaller ones get beaten by the bigger ones because they don't have the money. They just have what they have. Like, they don't have the money to preserve it. They don't have rapports with the farmers.
All right, now let's talk about Benue State, for instance. Now, of course, several tomato farmers have called on their state governments to buy up the surplus tomatoes across their state to curb the wastage. And we know that there are not so much of tomato processing industries in the country. So what are you learning about ways that the government can invest in this area of tomato production and prevention of wastage? Okay,
so I feel that the government can, like I said, the crates, the government can actually key into crates, refrigerated trucks, and also fertilizer. Yeah, the budget this year was really into agriculture. They can do more fertilizers, grow what we eat and eat what we grow. Really curb importation of tomato paste. So let's just grow what we eat what we grow, know how to solve it here and then to stop importing, because you can't tell me that we're like the 14th largest producer of tomato in the world, and we are still the largest importer of this tomato paste. It's actually not adding up.
Now, so tell us about your own solution as well to curbing tomato wastage.
Okay, so my solution is that we want to turn this tomato wastage into a new good, but we want to create tomato dehydrators, solar dehydrators, which will dry these tomatoes and grind it, and then we'll label it, do brand marketing and sell it.
All right, so how has your invention, or has it actually been examined by any government agency or supervisory body?
No, ma, it has not.
And why is that? You've not been talking to people, you've not tried to, showcase what it is that you're trying to do and how it can also impact positively in the nation?
I have, but the COVID-19 really stopped a lot of things. And also, I've been putting it out there for more funding, global boot camps and others. So we've gotten boot camps on how to increase its investment, boot camps too.
Well, let's talk about the tomato paste industry generally. What's your observation? What have you observed since you ventured into this line?
Well, I feel that the tomato paste industry is actually for the big boys, the people that have the money for the processing plants. And really, I don't feel they really produce it in Nigeria. The only person that really could do that was Dangote and maybe Tomato Juice that was really trying. But then we don't really have tomato processing plants and other things.
And why is that?
I don't really know. I'm not sure.
You've not done a background check to see how viable it is to actually have such plants in the country, and then talking about an enabling environment for this business to thrive?
No, I've not.
All right, so how much of improvement now has your project enjoyed with the support fund? Of course, you were a participant at the Global Enterprise Experience Competition Award with your project. So tell us more about that experience.
Okay, so my project got funding from the Global Enterprise Experience. Really, I worked with a team of like eight people, and then I was the only Nigerian there. So when I got the funding, I had to implement it in Nigeria. So I had to get a lot of other people from Nigeria, my teammates and stuff, my friends. So I was able to travel to Kaduna to meet the farmers and talk to them about it. So the next stage is building the tomato dehydrator for them. But the COVID-19 really stopped a lot because I could not travel by air. Kaduna.
Now, you said you traveled to Kaduna and you interacted with some of the farmers. So apart from, this issue of wastage, what other challenges did they tell you that they were facing?
Well, I feel with cocoa too. They have a problem with cocoa and others.
All right. So what do you know now? Of course, you're more involved in tomato powder production side, but the bigger picture and opportunity is in the tomato paste. Of course, you've talked about funding and how, it affects it. But what do you know about the standards for tomato powder production in Nigeria?
Well, I've not really... Tomato powder is one of the byproducts, so I've not really saying that they produce it in Nigeria. But then if they really want to produce it in Nigeria, it's just about the hygiene, the Standard Organization of Nigeria coming to check it and just making it hygienically viable and other stuff.
So as a student now, how have you been able to balance, this whole project with your academics? It must be quite challenging, isn't it?
Okay, so I'm really... my course is really challenging, very challenging. Sometimes we don't sleep, but then I have a team, a support system. My best friend, Ajoke, she supports me. So when I'm busy and she's not, she knows how to cover up for me. And
okay, so just before I let you go now, tell us how much of success you can achieve with tomato wastage prevention if given the needed support, and then what gives you the confidence that you can actually deliver on this project?
Okay, so if I really had funding, I would build more tomato dehydrating plants everywhere. Like, I really want to start with Kaduna, but if I really had funding, I could actually spread my reach to different tomato producing states like Kano, Jos, and other places. And I'm really confident because it's just, I feel tomato powder is unique and then it can really thrive. Just the education and enlightenment, when we enlighten the consumers about it, it can really thrive. And it can really thrive.
All right, thank you, student and founder of the Nigerian Tomato Project, Rachel Agbanagba, for coming on the program, and we wish you all the best.
Thank you.
All right, let's just go over some of the headlines we brought you earlier, beginning with the fact that President Muhammadu Buhari has received the newly elected president of the African Development Bank, Mr. Akiwumi Adesina, at the State House in Abuja. And President Muhammadu Buhari is actually soliciting Mr. Adesina's support towards fixing the infrastructure deficit in the country. He made this request while receiving the AFDB president, who recently won an unprecedented 100% vote after overcoming stiff opposition to guarantee him another 5-year term. President Buhari says that he backed Mr. Adesina's second-term bid because he has proven to be a good Nigerian. And then we also mentioned that the federal government has explained its decision to fully remove subsidy from petrol, saying that the country stands to rake in over 1 trillion annually, which could be deployed to fund other critical components of the economy. And while addressing a news conference in Abuja, the Minister of State for Petroleum Resources, Mr. Timipre Silva, also revealed that with effect from October 2020, Nigerians can now convert cars using petroleum to gas, which he says will be cheaper. According to him, the introduction of the fuel, also known as autogas, will be an alternative aimed at giving governments the regulation of the petroleum sector a human face. And then also talking about oil prices, they're trading below $40 per barrel once again today, pressured by a surprise rise in U.S. stockpiles as the coronavirus pandemic continues to erode demand for fuels. Brent crude was seen at $39.88 a barrel in early trade after falling nearly 2% on Thursday, while U.S. WTI was also down at $37.16 a barrel, having fallen 2% in the previous session. And both major benchmarks are down around 6.5% for the week and headed for a second week of declines as hopes dim for a steady recovery in fuel demand amid signs of a second wave of coronavirus outbreaks. Meanwhile, the Reuters poll showed that U.S. crude inventories rose 2 million barrels compared with forecasts for a 1.3 million barrel decline. We have more headlines now from the African Export-Import Bank, which has disbursed $200 billion to Zenith Bank in a bid to maintain foreign currency trade flows impacted by the COVID-19 pandemic. Afrexim Bank, in a statement today, says that the fund, under its pandemic trade impact mitigation facility, will also allow the Tier 1 bank to lend to eligible sub-borrowers involved in the manufacture and supply of medical resources needed to combat the virus. According to Afrexim Bank's Group Managing Director, Ebenezer Onyago, the facility will enable Zenith Bank to contribute to the fight against the COVID-19 pandemic by providing trade finance and foreign currency funding for the importation of urgent medical equipment and raw materials. Afrexim Bank's Pandemic Trade Impact Mitigation Facility, which is designed to support and stabilize the foreign exchange resources of African countries, was set up in March 2020 to provide financing to assist Afrexim member countries to adjust in an orderly manner to the financial, economic and health services shocks caused by the COVID-19 pandemic. And we'll be talking more about the COVID-19 pandemic headwinds when we return in just a moment. Please stay with us. Welcome back. Now, whether the COVID-19 pandemic has an exit timeline or not, we must recognize the fact that no business has been spared from the negative implications of the coronavirus as the world continues to grapple with the economic contractions and volatility. The pandemic has dealt a blow globally on small and medium enterprises, a situation that has led to currency pressures, pay cuts or job cuts, increase in unemployment rate, the high jump in inflation, and declines in purchasing power. While entrepreneurs struggle to stay afloat with hopes that the pandemic will soon fizzle away, business and risk analysts seem to hold some solutions to the questions of their ventures. Christian Wilson, a consultant at business advisory firm Spirit, joins us now to share some recommendations on how to navigate the environmental headwinds in the country. Good morning. Thank you for joining us on the program. Now, let's hear your views on how the small and medium enterprises have been affected by the COVID-19 pandemic.
Hi. Okay, can you hear me?
Very well.
Okay, it's great to be joining you. I think that there's actually been quite a huge variety in terms of how people have been affected by the pandemic. I think it's really a function of where you were placed at the industry level, how your company was configured. And so I think that you've seen quite a lot of resilience from some of these MSMEs who were super quick to adapt to many of the changes that the pandemic were bringing. Some were actually really good at anticipating because of what was happening in other countries, what was going to be happening in Nigeria, because as you know, we did move a little slower than other places in terms of how we managed the pandemic. So all in all, I think it's been quite a mixed reaction for MSME.
Now, well, what have you noticed in the ways and the means that the MSMEs have responded to the COVID-19 pandemic crisis?
So one of the things I've been quite impressed by has actually been the agility in terms of pivoting for a lot, especially small businesses. I think medium-sized businesses struggled a bit because they had much more complex processes that they needed to pivot. But I found that these micro and small businesses were very quick to capitalize on resources like WhatsApp, phone calls, and really sort of transition their businesses into more or less virtual and online businesses that they can deliver from everywhere. So I think in many ways, the sort of high level of informality in terms of the ways that many MSMEs do business, which is typically a challenge, right, to their own growth and their own scaling, in this particular case, help them to be very quick about the transition with the lockdown, things like curfews and not being able to move things quickly around. There's also, of course, the way in which delivery logistics and how anybody and everybody was, buying a motorcycle and making sure the deliveries could get from one part of the city to another helped to speed things up as well. So if you think about the fact that our FMCG sector is one of our biggest sectors, and then of course during COVID-19, when people couldn't move around as much, you're seeing at least amongst what you would call like a middle class to upper middle class demographic, vendors that are targeting that demographic still being able to do well.
Now, still talking about the headwinds now, as a result of the pandemic, we've actually seen an acceleration in inflation rates and exchange rate pressures. So what strategies can you recommend for SMEs to actually weather the storm?
Absolutely. That's a really great question. I think that's a question and it's a really important question for any venture at any size doing business in Nigeria, right? If when you buy your goods, you're bringing them in at 360 or 380 naira, and then by the time the goods arrive, they clear through the ports, you're actually trying to sell them then at 440 or 460 naira. It's a really complicated process, but I think that some of this is about three things. One is research, right? So making sure that you're actually keeping a tab on all of the various macro and global geopolitical factors that have a potential to affect the economy, so that you're able to adjust quickly to that. The second thing is I think about having a dynamic pricing model that adjusts for some of this. I don't think it's easy to predict that you're going to be making a change from 360 naira to 480 at a point 500 naira, within a matter of weeks. But I think there is some hedging that you can do in your pricing that allows you to adjust for that. But I think the most important thing that MSMEs in particular need to solve for is having really sort of low cost structures. I think that as you build a business in an environment like this one, which has all kinds of challenges, political, infrastructural, socioeconomic, that you want to have your cost structure be as low cost as you possibly can. And you want to have a team and a setup that's as dynamic as possible.
Now, we've seen a lot of SMEs across the real sector having to downsize this period in a bid to actually save costs. But is that the only alternative to apply whenever there's a crisis of this nature?
Right. So the downsizing question. So I've actually seen some SMEs grow, not just downsize. And I think sometimes downsizing might not even be the solution. It might be restructuring, right? So you might have a venture that's not actually organized in the most efficient way possible. Perhaps you're not leveraging, your employees in the best way. And I think that one of the trends that I noticed for some businesses was that they use this as an opportunity to restructure their businesses. I think that sometimes for sociocultural reasons, you can't quite, you wouldn't be able to make some dramatic changes in your personnel and in your staffing. But I think under the cover of the pandemic, a lot of business leaders, a lot of shrewd business leaders were able to really readjust their staffing and think carefully about who do I really need on my team? Do I need to keep this person on my team? Do I need to, change the way that I'm using this person on my team? And I think that that's really going to account for some of the success that they're going to be able to see moving forward. And I think broadly speaking, venture leaders, entrepreneurs need to constantly be thinking about how it is that they're structuring and managing their businesses, right? Constantly asking yourself a question for a rapidly growing business. Is this the right way to be doing this? Is there a more efficient way to be doing this? And then is the way that I'm doing this sustainable for building a long-term institution? Will I be here? Obviously, you have to take care of today. You have to make sure that you're making the decisions that allow you to survive the headwinds that we've been talking about. But you also have to make decisions that are good for you in the long term, right? So on a 5, 10, 15-year horizon.
Now, let's talk about the role of government. Now, what do you make of government policies that are geared towards economic stimulation in Nigeria?
I think they've been interesting. They've been a mixed bag. I think we've seen over the last, week or two, various kinds of responses to the government's economic decisions. I think that for a lot of these decisions are targeted, though not at MSMEs, which can be a good and a bad thing, right? So if you look at policies that are coming from CBN, and if you even look sometimes at some of the structures that are being put in place by even organizations that are thinking about small businesses like NIDA, what you find is that this decision-making is in particular targeted at MSMEs. What that means, I think, is that they can continue to fly under the radar and make choices that are going to work for their environment.
Now, let's look at the issues of tax. Of course, authorities still demanded for taxes for the month of April, which was during the period of the total lockdown. And now that some of these SMEs only open partially, the taxes remain unchanged. How can these disconnects be resolved?
Absolutely. When it comes to taxation, for any business that's thinking about growth, so one of the points I was making earlier was the idea about making decisions that are going to allow you to survive today, but are also going to allow you to build a long-term institution, right? Taxation is one of those things that if you're doing business in any country, you have to build into your revenue modeling, you have to build into the sustainability of the business model. So really, one of the things that MSMEs should be doing is continuing to equip themselves with as much knowledge about, how to properly manage their taxes. Thankfully, there are lots of resources, both in terms of online through the FIRS, if you're operating in Lagos through the LIRS, there's things like DIY law, there are consortiums that are really looking at how to ensure that leaders of MSMEs know how to manage their taxes. I know that it can be a bit confusing and it can feel quite overwhelming, but I've found that in general, right, if an MSME is thinking critically about the landscape that they're in and the fact that taxation is a matter of fact in this landscape, it's something that you avoid for too long and then it becomes a problem for you. That if they take the proactive steps to make sure that they're doing the right things, then it's less of a hassle for them in the long run.
Of course, the government is really scrambling for additional sources of income at this time. And the FIRS just announced some stamp duty charges, one of which is a 6% stamp duty on rent. What strategies can you give to operators to manage issues such as this?
Right. So again, this is a communication problem, right? So as I understand it, that the stamp duty and all of those sort of associated charges are pre-existing. They're not new. What has changed is really sort of the degree of enforcement, right? So the government sort of putting out notices because it's trying to increase its revenue and saying that, look, we're going to be enforcing much harder on this, particularly for an MSME that doesn't have, a great deal of infrastructure to fight troublesome clients or deal with trouble. I actually think that doing the right thing at the level of making sure that all of your documentation is stamped and has followed all due process is good for protection for you in the long run. And so the 6%, I believe, is not a flat rate that applies in all cases. There's actually a quite comprehensive listing of, what rate applies and when. And so again, it's really about relying on these resources to make sure that you're not, overpaying your taxes. It's hard to get a refund on that, but also making sure that you're not underpaying.
All right, so a lot of these headwinds will lead to cases of cost transfer to consumers and hike in pricing. So how can entrepreneurs better handle this, considering the decline in purchasing power of Nigerians?
Absolutely. I think this is a hard problem to solve because everyone's going to, be tightening their budget. People don't want to, spend willy-nilly as much because the economic pressures affect us all. I think really here the solution is about value creation. We're going to consume, by and large, those things that we think we need. And so the stronger argument that any sort of business leader can make about the value of their product and making sure that what it is that they're offering to a consumer is something that actually improves the quality of their lives or helps them to, navigate whatever present situation they're in, then you're going to see, that you're, despite the circumstances, that you're still thriving. Because that's really the question, right? Is value. When you're in a low resource environment, when you're dealing with scarcity, people start to try and make more intentional decisions about how it is that they're allocating their scarce resources. So entrepreneurs that are focusing on real value creation and not just taking advantage, I think are going to see a boom at this point.
Now, part of the challenges that SMEs would face this period perhaps is the fact that more of them have also defaulted on their loan obligations lately, and the CBN has just introduced the global standing instruction policy to debit defaulters' accounts in other banks to make up for those repayments. How would you react to this?
Right. So I don't think, as has been explained to me by some really intelligent lawyers, that is really targeted at MSMEs. I think it's really targeted at some of these really, really massive loans that have been quite difficult for banks to reclaim from, really bad debtors. That said, of course, is it possible that, based on the GSI update that MSMEs might be targeted? Yes, but the numbers that we're dealing with these ventures are so low, and the cost of actually implementing this GSI update make it fairly impractical for banks to be pursuing MSMEs. That's not to say that MSMEs should not do a better job of managing their debt. I think across board, whether you're looking at very large businesses or very small businesses, there is an unfortunate culture of bad debt. And so one of the things that leaders need to think about is better fiscal management policies, right? So if cash flow is a problem and that's what's making it difficult for you to, settle your loans on time, making sure that your creditors are happy with you, then you need to rethink the way that you're doing business, right? If that means bringing consultants in to help you, if that means sitting down with your team to re-strategize, if that means doing a better job of claiming payments from your customers, whatever a venture leader can do to ensure that they're actually a good debtor, I think is really, really important, because thinking long-term about our landscape as we get more and more players in the space that are interested in credit, both at the microcredit level and then, larger sums of money, the better habits, the better debt hygiene that these venture leaders take on the better for them, particularly as they look to grow and scale into new markets.
We'd like to thank you, Kristen Wilson, co-founder at Spirit, for sharing some of your time with us this morning.
Thank you so much for having me.
All right, now, so the Nigerian stock market finally snapped a three-day sell-off yesterday. Eddie Iwang will be telling us what changed. Good morning, Eddie. Still, the market closed higher yesterday, finally, after 3 days.
Good morning, BC. You're right, and that was all due to bargain hunting on Tier 1 banking stocks and MTN Nigeria. Now, that drove the market up by 0.38% to 25,520.97 points. The equity cap was also higher at 13.313 trillion naira. However, the activity chart was lower yesterday as volume declined by about 12.3% to 236.48 million units, worth 1.64 billion naira, and all of that changed hands in 3,251 deals. The sectoral performance was broadly positive. We saw the banking index up 2.28%. Of course, that was driven by the bargain hunting on Tier 1 stocks, FBN, Hayes, Zenith Bank, GT Bank, Access, and UBA. Consumer goods was also up 0.08%. Industrial goods was up, while insurance and oil and gas declined. But let's talk to Charles Fakruga, the chief dealer at Titico Trust and Investment Company, for more. Good morning, Mr. Fakruga. Thank you for joining us on the program. We saw the banking stocks lifted yesterday due to bargain hunting. Now, should we expect that to continue today, or are we likely to see profit taking on those stocks? Good morning, Mr. Fakruga. Can you hear me? Well, I think we've lost Mr. Fakruga there. While we try to get him back, we saw Owando post gains yesterday, but that wasn't enough to lift the oil and gas sector up. While Seplat declined, Eternal was up and Japol was also up. The unlisted securities market yesterday declined, and that was due to profit taking on some of the the counters on those markets. The NSI was down 1.04% to 714.44 points, while the market cap was at 524.81 billion naira. Activity was mild yesterday. We saw about 132,000 units worth 1.82 million naira, all traded in 3 deals. Now let's look at the fixed income market a bit just before we go on a quick break. The bond market was bullish yesterday as average yields contracted by about 12 basis points to 7.6%. Now across the curve, yields declined on the short end, while the long end and the mid segment were flat. I think Mr. Fakruga is back with us. Good morning, Mr. Fakruga. Can you hear me? Well, I think we'll just have to leave it there with Mr. Fakruga. At the bond market, we saw 54 deals worth 27.57 billion naira yesterday. The Nigerian Treasury bills market, although we saw mild activity there, the market was bullish as yields declined yesterday as investors still sought to cover lost bids at Wednesday's primary market auction. We had 3 deals worth 550 million naira on that counter. The Omo market was also bullish yesterday as yields also declined. We had 21 deals worth 131.98 billion. Now we saw more activity on the August 2021 maturity and the February 2021 maturity, but I think we'll have to leave it there for now, BC.
Thank you, Eddie. We'll get back to you in just a moment to do more review from the debt and currencies market. Plus, we'll also see what headlines are driving the London markets this morning. Please stay with us. All right, let's head now to London, where Juliana Olayinka is waiting to tell us what stories are driving the markets this morning. Good morning, Juliana. Let's kick off our conversation with this breaking news this morning, talking about the latest GDP figures showing the UK economy expanded by 6.6% during July. That comes as some relief this period, isn't it?
It is a slight release, Bissy. Good morning. It's slightly lower than the 6.7%, which City economists had expected, but growth is still growth, and we are seeing that there's been considerable uptick across all sectors, manufacturing, construction, and most importantly, services. We know that Britain is a service-based economy. Our GDP accounts for more than 80% of the hospitality sector. And in the month of July, that's when we first started seeing the opening of pubs and restaurants and outdoor spaces. But it is still fairly down on June. June's growth was at 8.7%, and before that in May we saw growth of 2.4%. So the hopes for the V-shaped economy are showing potential, but are still really not there, considering that month on month has seen a fall. Also, as well, most importantly, we are 11.9% worse off in terms of our GDP than what we were at pre-COVID level. So there is still a long way to go. Boris Johnson's bombshell decision to kind of put us back into some sort of semi-lockdown or reduce the number of people we're gathering with is going to pull some sort of momentum. We had hoped that business confidence would return, consumer confidence is going to return, but we're not seeing the numbers that we would have hoped to see go back out onto the tubes, into work. And of course, we're seeing that although there was growth in July, the growth was much slower than it was in June.
Now, pressure continues to mount on the government to rethink the decision to bring its wage subsidy scheme to an end next month after an influential group of MPs said that Rishi Sunak should continue to provide targeted support to struggling sectors of the economy. What else are they recommending to the government?
Well, you're right. The pressure is growing. It's mounting. And I think this week has probably been the most intense scrutiny that the end of the furlough scheme has received. Especially yesterday, we had the former Labour Prime Minister and the longest serving Chancellor of the Exchequer, Gordon Brown, saying that the end of the furlough scheme is going to unleash horror on Halloween, which is October the 31st. And now the Treasury Select Committee, these are a group of MPs that have been listening to statements from the Treasury and Chancellor Rishi Sunak over the past couple of weeks. They've come up with a report, and the report really focuses on the job retention bonus scheme. This is the scheme that the Chancellor and the Prime Minister are trying to use to appease people that are not happy with the furlough scheme ending. So for every employee that an employer takes on, they will be given a £1,000 bonus. As soon as this was announced, the opposition Chancellor Annalise Dodds did point out that why would you be giving money to people that would already be going back into jobs? And this is the scheme that has received the most attention by the Treasury Select Committee in their report. They believe it is inefficient, not fit for purpose, and is a waste of money. They also, like what we've heard from Gordon Brown yesterday, are asking the government to provide targeted support for sectors that are the most badly hit: hospitality, tourism, retail. There are some figures that have just come out showing that in this country, in Britain, over 145,000 jobs have gone in retail, and the furlough scheme hasn't even come to an end. So that's just how bad it is. So that's what they've been doing. But, again, I've been giving statements on this programme, haven't I, from the government. And earlier this week, the government were once again backed by the Bank of England. Andy Haldon was giving an interview with City AM on a podcast, and he did say the furlough scheme has to come to an end because by extending it, what you're doing in this country is delaying the inevitable, which is these jobs will have to go. Some jobs, not just in Britain, but across the world, will not survive the coronavirus. So that's really the intention of the Treasury Select Committee, to put more pressure on the government to extend the scheme.
And these are not easy times for Rishi Sunak, Juliana. The Learning and Work Institute is also urging him to pump more than £15 billion into job creation schemes at the autumn budget to protect 1 million people from unemployment after the furlough scheme comes to an end. Is Sunak likely to take this advice?
Well, this is part of the same story, really. It's just another think tank body that's also putting pressure on the government, asking them to look at their budget again. The think tank are asking for more public investment and really just to target the investment that the government is spending into a better approach. They've really focused on the Kickstart scheme. Again, this is another scheme that the Cabinet are trying to use to appease people that are not happy that the furlough is coming to an end. They've put billions of pounds into training for 16 to 24-year-olds so that they can upskill and learn a new trade. What this think tank are asking is for the government to put in an extra £1 billion so they can look after adults. There's been lots of complaints about adults who are going to be falling out of jobs. Where are the schemes for them? That's what they want to do. And also they've asked the government to put £4 billion of a wage subsidy to be put to people who are going to lose their jobs. So if you are considering, not bringing back your staff that's on furlough, this think tank are asking the government to give those employers give them 20% of the wages to subsidise how they can pay for it. So again, lots of pressure, part of the same story, but really, what Britain is facing at the end of October is potentially over 1 million people being laid off of work. Over 9 million people have lived off the furlough scheme. 145,000 jobs gone in retail. Hundreds of thousands more gone in other sectors. But we're expecting a tidal wave of redundancies unless over the next couple of weeks the government adhere to the calls from these think tanks and policymakers.
Very, very tough times indeed. Well, thank you, Juliana. We'll see you again in the afternoon. Let's get back to Eddie Diong for a review of the debt and currencies market. Over to you, Eddie.
Thank you, BC. Well, let's just quickly talk to Bemisola Bello Aromire, a fixed income dealer at UBA. Good morning, Bemisola. Thank you for joining us on the program.
Good morning, Eddie. Thank you.
So yesterday, the fixed income market maintained its bullish sentiment as investors are still reacting to the primary market auction on Wednesday. Is that likely to continue today?
Yes. The fixed income market in the week has initially been bullish, of course, as a result of liquidity. Liquidity in the market has been sustained all week through, as there has been no major outflow. So the bullish run is going to continue. We had unmet demand at the NTB auction, which what I mean is that 148 billion matured, but the central bank rolled over 128 billion. So that unmet demand came into the secondary market. Also yesterday, where we had the OMO auction, we had 250 billion mature, but CBN conducted an auction with only 70 billion on offer. So 50 billion on the longest tenor, 10 billion on the mid tenor, and another 10 billion on the shortest tenor. So all this unmet demand is going to spill into the secondary market. We're going to see also scarcity of deals force yields to compress further. And we're going to see the unmet demand and the liquidity continue to chase the few bills we have in the secondary market. So expect this for a longer, for the rest of the month, as I see.
Oh, wow, for the rest of the month. But then is there anything that investors will be looking out for next week in particular?
Okay, so investors are still cherry picking. So for those that have demand not met at the OMO auction, I see them going into the bond market. So if you look at the bond market for the week, it has also been extremely bullish. So we see yield on 2023 and 2027 drop to 3.8 and 7.89. We saw 2035 at around 9.75. So what they will still try to do is pick the yields that are still quite attractive to them. And since the bond auction is still far off in the month, the pressure is going to continue in the secondary market. For the NTB, now that we have 3% on the long end, which is higher than the savings deposit, which we all see at around 1.5% now, we see demand also for the NTB securities. So this demand is going to pressure yields lower for the rest of the month. And we've all reiterated that for September, the maturities coupled with OMO maturities and bond coupon payments is going to cause a lot of liquidity into the market and is going to push to force yields for the available bills and bonds to compress lower. So this is an ongoing concern.
All right, Bemisola, thank you for your input on the program and enjoy the rest of your day. Bemisola Bello Aromire is a fixed income dealer at UBA. I will have to leave you there on the market review. Over to you, BC.
Thank you, Eddie. And that's our show today. Thank you for watching. I am Bisi Adebayo.